Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone's doing well. All right, so a couple things to kick off the morning with, and one is a reminder of what we have coming up on the economic calendar for today. When I look at the calendar, by the way, I'm looking for typically those high impact events. G7 meetings are going to be continuing. We have some open currency positions that are long dollar by way of short euro, short Canadian dollar. So that's definitely something that could be a catalyst for more movement. Then we go into the 10:30. We have crude oil inventories. I don't look at crude oil as an uptrend. RBOB gasoline and natural gas are something that I view as an uptrend based on their structure. So trade what we see, not what we think, not what we feel. In fact, take even that jargon out of our trading, this thinking and feeling, and as if our lower intestines have hands and are putting our trades on. I mean, we don't even want that to happen. That sounds like a horror movie. But overall, if you take a look at the economic calendar for today, pretty clear sailing. I do want to mention, though, that in terms of Fed speak, we have Harker at 4 p.m., so right at the close. We have Harker coming up. So, these are things, these different Federal Reserve speakers, and you can see right there, these different Federal Reserve speakers are going to have an impact on the market because, by the way, we just heard from Powell. We just heard from Jerome Powell, and he absolutely reiterated inflation is the biggest problem. They are going to tackle it. They don't mind overshooting neutral. There was nothing about yesterday's speaking engagement that he had at the Wall Street Journal. The Future of Everything, I believe, was the name of the. That can't be real. But anyway, he was speaking at that conference, get together, whatever it was, and that's what he said. And Jerome Powell is actually the only FOMC member that is empowered to speak on behalf of the voting body, not the other ones. The other ones can express their opinion, but he's the grand poobah, right? So that's what we want to remember when it comes to any time that Powell is speaking. All right. As always, this show is about your questions. I'm going to go through what's on the chart, taking a look at what I see. Remember, trade what you see and protect risk. That is a trader's job, not to predict, not to future pace, not to say this is where the markets are going to go or this is what I'm going to make. We can't control any of that, right? All we can control is what indicators are on our chart, whether or not we click the buy or sell button, and how we control our downside. That is our job. And I think you all know that. So let's just get into the questions. All right, Zions, when I scale out of a position, do I sell the aggro or the conservative first? So we scale in. A lot of you know that. That's the process that I have for futures and Forex and options, everything. So that means that I think about risk. I think about 3 different layers of support or resistance that I'd like to build a position at, and then it becomes in its entirety a position for me. So once price reaches the first target, a lot of platforms will let you single out some, I shouldn't say a lot. Some platforms will let you single out those contracts you bought at a specific point, at a specific price. Others will just usually combine them into an average cost basis. However, we can know how many contracts we bought at each price level. So just unload that number of contracts. So those are 2 different ways that I'll tackle depending on the platform I'm on, the flexibility that I have. Also, I focus on first in, first out on my platforms. If you have a setting for that, first in, first out, that's perfectly fine. Being a Forex trader for 2 decades now, first in, first out was something we had to deal with. And I've just made sure that my approach is first in, first out friendly as I've continued to trade more markets with that mindset that emanated from Forex. So thanks for the question. Let's see, NEM. Where is NEM? So Newmont Mining. the thing to remember about different levels, and Stephen, I don't know your setup, so I can't speak on behalf of that. But again, I can speak on behalf of what we see on the chart. And, sometimes this comes across as salt in a wound, but these are things that if we can notice the shifts, we can make adjustments. That right there, that window of time, mid to late April, was the shift from, as you can see, the uptrend to more of a neutral market. And then most recently, just a couple days ago, we've transitioned into, based on the multi-trend, we've transitioned into a downtrend. And we're really doing battle at Newmont Mining is doing battle at the 200 propulsion, which means for me, that's the equator. Bullish hemisphere above it, bearish hemisphere below it. If we're going to have any kind of bounce from this area, my experience is it's because traders look at this 200 as a level that is a buying opportunity. And any kind of movement higher is very much likely going to be contingent on support above that level. So that's what I see happening to Newmont Mining right now. If there's going to be a bounce, I wouldn't expect it to go any further than recent resistance, or that would put us around 75, or even these Darvis levels in the wave between about 71.60 and 71.70. So that's where I would keep an eye on where Newmont is doing battle, bulls and bears, duking it out, and then where it could go depending upon which way momentum goes. All right, next up, any thoughts on AMD? No, I really don't. I don't have thoughts on AMD. Two things about AMD, though, I will say. I typically don't trade AMD personally or in the mastery because it is, as we like to say in the mastery, it's spendy. Part of risk is cost, right? Part of risk is cost. And AMD, even though it's a $90, $100 stock, it's an expensive option. So it's difficult for a lot of traders to control risk when you're buying an expensive option. So I usually don't focus on AMD. So it's not a matter of upgrade, or I don't care about the upgrade science beer. I really don't. Normally, I like to fade them. But I will say I do have all my cards on the table. I do have exposure here in MU. We are taking some heat. So we're in a little bit of I think some traders might have ditched the moderate. We're still in the conservative. That one's fine. And it looks like it's coming back down our way. So I am in MU. I am not in MD. And I, generally speaking, don't want to trade news like an upgrade. Structure first, process first, and then the catalyst for volatility a distant third. So I really don't have any exposure or interest, quite frankly. And that's okay, to say, hey, this is presenting too much uncertainty and volatility. Citi was another one like that, by the way. A lot of times a move is very tempting, but if I cannot control risk, if I cannot find a level at which my tools say there could be support or resistance that I can rely on and control risk from, I've got to pass, right? So I favor, if we have to look at an activity level of being really active and being fairly prudent and inactive, I'm definitely the inactive side. To me, flat is a position. Something's got to be so compelling, not only from where it could go from a profit perspective, but the structure of the trend and how I can control risk. It's got to be compelling on all three of those for me to really want to, deploy my capital, put my cash in harm's way. RB has a season coming up. I'm not sure what you mean. It has a season coming up. A seasonal? So we have the driving season, but Alan, I think that's what you mean. I'm not quite sure. But a seasonal tendency, if that's what you mean. Sure. So remember, though, driving season rallies happen months ahead of when we start to talk about it. If you look at the seasonal chart of RBOB, you'll notice that driving season rally starts in February, March, not upon the season beginning in June. So consequently, that is not when the trade idea syncs up. It's actually further back in the year. So anytime we have a seasonal expectation, driving season or winter. Remember, that's sort of the crescendo. That's the peak in some ways. It's leading up into, right? Is that ramp up into. So I hope that helps. All right. Any thoughts on BMBL? Let's run it through the charts. No, can't say that I do. I don't know that I have an edge. Really, I'd like to see personally resistance, and a slow stochastic confirming that this is overbought. So the process is chop. Chop means focus on the lower and upper edges of price action. And the middle is actually really sort of the hazardous spot. So once we get to the upper edge or lower edge, if we can sync that up with a preferred oscillator, my preference is for a slow stochastic. We're probably getting close. We're probably getting close to that overbought area. 2760 to about, call it $30.50 is where the Darvis levels are showing where the resistance could be. All right, next up, which strike do I use when trading QQQ, zero dated options? Which strike? It depends on where it's trading, John. I prefer at the money on the strikes. Day trading or otherwise, I prefer at the money. UUP, long. Practice. So UUP long today, it's gapping up. So I'm not ever going to be buying something on its way up. That's momentum entry. That's okay. There's two ways to trade a trend, and UUP is a trend. This would apply to DX as well. The way that I will focus on a trend is when it dips, kind of goes on sale, if you will, blue light special. So it's a correction within the overall uptrend. That's the dip. That's all, whether you want to use the word correction, which is probably not a good word to use because in the market, correction sort of means something else in a broader sense. So retracement is probably a good place to start. So a retracement of an uptrend is a dip. And I like to prioritize buying dips, the actual dipping bearish momentum. Now, some traders like to see that after the dip, that the uptrend is resuming, and that's the rip or the rally. And some traders want to buy into that. That's not the way I like to enter the market. I prefer the former. So if you prefer, if that's your jam, then you're getting that today. But just remember, there's two ways to look at the dip, either buying into that bearish momentum or buying into the bullish momentum of an uptrend. So I won't be doing it personally because practice, we've already sent out the alerts and we did that yesterday because, again, I like the bearish momentum into support. All right, next up, Andre, Citi. Oh, gosh. So Grandpa Buffett revealed that he bought $20 gajillion worth of Citi. And as much as I wanted to look at a technical opportunity to play that gap up into the wave, here's the thing. How long is that narrative, that story, that news going to keep Citi elevated? And that's the uncertainty. I really thought about it yesterday thinking, we might get that shot around 51. It looks like a really great spot to take advantage of a downtrend that had a piece of news that may not necessarily continue higher, especially when you consider what most financial stocks are doing. So that's what I was thinking. And this morning, I'll probably take a look at it. If it's not moving higher, it's going to be difficult for me to justify an entry. But really anything between 50.5 and call it about 51.90, preferably with bullish momentum, will be fair game. So I'm definitely looking at that one. And I'll be in the Sector Secrets Mastery Room this morning. I am certain that some of these names, like Citi, are going to be part of the discussion. Absolutely. All right, moving on. Good morning. Good morning. All right, DHI. Was there enough of a bounce to get a short? Well, all I can talk about is what I was looking at in terms of what was enough of a bounce. And on DHI, I was looking at a range from anywhere as low as 70.65 to 73.90. Now, partly what I do is I share with members, whether it's in the chat room or here in Charts and Coffee. I just share what I'm looking at. I'm sharing what levels I'm focused on. But what I really always reiterate is, can any one of you individually, right? Is it too spendy? Is it too much risk? Are you using too much of your capital and risking too much of that capital for the trade? So ultimately, again, you never want to be blindly following somebody else, because then you're also blindly following their risk management. You have to be aware of that. So that's why I have the range. Some traders will say, Rog, buying a 75 put closer to 73.90 is within my risk tolerance, but buying a 70 put at 70.65 is not. Only you can make those decisions about where your risk muscle is now at this stage in your career. So structurally, love the short the rip. It's actually an alert I sent out for something I want to do with the 70 and the 75 puts. So did it bounce enough is the question. And actually, technically it did. Because we were looking at this around 1:30 Eastern. And by, as you can see, 20 minutes before the close, we did hit the initial trigger. We actually hit it, I think, just the one time, maybe twice. We hit the initial trigger that validates. So no trigger, no trade, right? No price trigger being reached means that idea is waiting and waiting and waiting like a batter at the plate for the right pitch. And so, yes, right into the close, it was valid from the aggro level and aggro level alone. All right. So, and by the way, if those kinds of ideas, if these kinds of tools, if this kind of approach of Rog, yeah, I want to understand how to, emphasize controlling risk and then thinking about trades. I like the tools or what have you. Check out what we're doing in the Sector Secrets Mastery. That's really what it's all about. You learning how to control risk for your account, educating yourself, making educated decisions about how you're entering, not a blind trade along, which I do not recommend and I would not do, right? Because at the end of the day, trading is very much personal in terms of the capital in our account, open trades that are already in that account, and our risk tolerance. How do we gauge a trade from the perspective of how much could we make? That's future pacing. That's crystal ball stuff. That's only going to bring you heartbreak and disappointment. Everything should be built upon what happens if I'm wrong. And anyone who's blown up an account, anyone who's taken severe losses will stop and say, oh, that's really the only way to build a trade, to build a watch list, and to enter these trading ideas. So if you're digging that, come check out what we're doing in the Sector Secrets Mastery. Gold and silver. Jim, gold's in a downtrend. Yeah, gold's in a downtrend. So it's short the rip for me. Silver in an even more established downtrend. So more short the rip for me. As far as MU, so we touched on this briefly, scaled in at, so with MU, I believe this trade idea was one we discussed in all the rooms. So I know a lot of you might be familiar with this trade. We did not have an aggressive level. It's a spendy stock. We went with a moderate and a conservative. So the moderate idea triggered at 73.80. And that's where we would buy the 72 and a half puts. That was the plan that I set for myself to follow, right? Wait for the trigger, then buy those puts. Now, in the strength that we saw yesterday, what I recommend is, again, always thinking risk first. If that moderate has lost a specific percentage of premium value, I usually focus on 25%, I got to cut it loose. But it's okay to cut one leg of a trade loose and still keep the conservative trigger trade. So the conservative triggered trade, which is at 73.80, took heat. Look, we were in an unrealized loss, but not enough to have to exit. So for many of you, you might have scaled out of a loser. Ditch the stuff that's hurting your account when that validity is breached. Just, it's not personal. It's not emotional. It's about capital preservation. And then say to yourself, but I do have this other entry that's actually holding its own. keep that one. And this morning, everything's going to look a whole lot better. If we get some follow through down through 73, Yahtzee, we're in good business. We're in business. We want to see us get to that 72.50 price. So looking a whole lot better. SMH was strong yesterday. AMD got that upgrade, and it probably yanked a lot of these names up with it, irritatingly enough. But that's what we had to sit through. And look, we never know what the markets are going to do next. So when they break that threshold of risk, gang, it's never personal. The market's not out to get you. It's just filling orders and moving in the direction of the most stops. If we happen to get caught up in that, let it go. There's, when you free up your capital, you're freeing up literally capital, but also mental capital as well. So keep that in mind. As always, thank you for the questions. Thank you for being a part of the Caffeinate and Dominate crew. Even better, thank you for embracing educating yourself, right? And putting in the work and putting in the time. I appreciate it as always. I'll see you all tomorrow, same time, same station. And meanwhile, be good to each other. I'll see you tomorrow.